Good question, because a lot of investors, especially in this environment, would just talk about the quality of the business. That's what drives returns, and it's a sort of a label for saying that you do better by buying better businesses that are over the long term capable of producing excess returns. And the problem is we think there's a missing element to the statement, which is, yes, that's what we're all looking for, but it also, your returns from the investment as opposed to your returns from the business brings into the equation the starting multiple or starting valuation. So we think it's both, and usually you don't get a chance to buy that great business unless there's some sort of change that's allowing a gap to open up. We prefer to actually analyse what's happening today and say, well, actually there's evidence here with Samsung adopting a pretty progressive payout ratio and buyback policy. So against that, you're also just getting an opportunity to buy leading businesses. They've got those characteristics. In the case of Samsung, very steady profitability. Good opportunities for growth because it is a leader, right? It has built barriers to entry in a lot of its businesses, and it has a product cycle. So we put a big emphasis on we call it multiple ways of winning. Which the first way you win is to have a value approach. Look for intrinsic value. Number one. Number two, how is that underwritten? To what extent? What is going to close the gap? And typically, it's one of four things. It's product cycle. In Samsung, you've got that in spades. Disruptive screen technology, a new and successful launch on its S7 handset, and then often it's outcomes relating to changes in competitive dynamics. So cyclical industries where you get overcapacity clearing, or a truly disruptive new business that comes in. In the case of Samsung, it's not so much a new business model, but it is the disruptive nature of super thin AMOLED screens, where they're a real leader, and the fact that we're going to go from a smartphone environment to a foldable device environment where the lines, the distinctions between phones, tablets, and laptops are really going to start to blur. And then finally, it's changes in the regulatory environment. Samsung doesn't really face regulatory issues, so it's not so much a factor of the investment case. But finally, management self-help, and we have that. We think management at Samsung are adopting more progressive payout and buyback policies. So if we get a value opportunity which is underwritten by multiple ways that we can win, if we're wrong on something, we're not exposed to a single point of failure. And that's they will tend to be our biggest holdings. Low risk, high return opportunities will always be at the top of our holdings list.